Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Monday, the 10th of January. Everything back to work today, I suppose, back to the new year. Starting off with 7 Digital, which I think I looked at yesterday, but it's so exciting today with its 9% rise. I thought I'd look at it again. Here we've broken that October line of resistance at around the 0.5 pence level, and above that looking towards the 200-day moving average around 0.9 pence, which would be very nice by the end of next month. The best case scenario target here up to 1.1, which is that July resistance line projection. And the upside here should be on tap while we hold above that 0.5 pence zone. I did my top 20 over the Christmas period, the Christmas holidays, while everyone was bored. And first stock to hit its target out of the 20 has been Canadian Overseas, which maybe is, to some was the most unlikely of them, but managed to get back up to the low 30s, which is what was hoped for. The target, I think, was 30 pence when we were at 17, so we hit that. The crucial thing now really is for the shares to hold ideally above that late November resistance around 24 pence, but certainly above the 50-day moving average at 22.5, above that 50-day line. Then we could make more attempts on clearing the low to mid 30s, which has been the sticking block for the shares since the end of September. So let's see how Canadian does on this occasion. Stock which was looking really good just at the end of last year, but I suppose came back a little bit more than people would have wanted or liked. Hit 46, 47 pence on Conroy gold and came back all the way to the 50-day moving average, which is fine. Old resistance became or has become new support at 28 pence, and above that, looking for a partial or even full retest of last month's best levels over the next 4 to 6 weeks, something like that. At this stage, really only well below 28, delaying the upside scenario, the recovery scenario, to any extent. On to Dukemount, which was looking rather sorry for itself towards the tail end of last year, and let's just see if I can get the stock to appear here on the on a charting basis. Here we've got the situation where the shares have managed to rebound reasonably well now. We've had an extended period of decline for the stock within that triangle from back in March. The interesting part here, I suppose, is the way that we have had since the end of November bullish divergence in the RSI window. So lower lows for the share price, but higher lows for the RSI, and breaking that line of resistance from March around 0.22 pence or 2.1 pence, 0.21 pence may be significant. If we're going to close above that or have a weekly close above that area and that line, then we could see the shares at least head back up to the 0.3 area, which, given where the stock is now, would be quite a result. Ideally, there's no further probing below the 0.2 pence level. Stock which was much followed and much liked in the autumn was Global Petroleum, rather. Here we've had that sort of sideways shuffle. We had a false breakout or false push to the upside back in November, which didn't manage to beat the August peak at 0.74. Looks like the shares are having another go, though, and breaking a line of resistance from back in November. That was broken around, the 0.48 pence level, and above that, we could see a retest of the main resistance through 0.7. It would be rather unfortunate if we didn't do any better than the mid-50s there, 0.55, the mid-December low. But what's interesting here is that we seem to have had a bear trap rebound from below the old support from, basically post-August support around 0.48. So that is encouraging and suggests that maybe global is finally on the front foot. Harvest Minerals is next, and here, if I can once again type in the right code, we can see that shares have delivered a decent breakout here. We were previously looking for the 5.5 pence area, which has been easily surpassed, and that leaves us trying to work out what the next target on the way up may be. Probably up to the upper parallel of the price channel drawn from back in September last year, so maybe up to 7 pence, maybe 7.5 pence over the next week or two. Upside valid, and maybe even more than 7 pence while we hold above 4.75, which was the last major resistance for the shares back in June. Moving along to Iofina, which probably wins the award for the best looking bull flag of the day. Here we've got this beautiful formation here, at and above old resistance, which was around 17.5 pence, and above 17.5. We are quite ambitious now, given how long that bull flag has lasted, for a target up to 26 pence by the end of next month, and if we're really lucky, by the end of this month. Stock which I think is new to the Bulletin Board Heroes is coming up, Ingenta. Here you can see that we've had a massive gap to the upside, and that's come after a bear trap rebound that we had in October as well. Maybe the stock's not for everyone, given how obviously liquid it is, but just a chance of breaking the neckline resistance around 95 pence and then heading up to the next level, which I suppose would be 115, which was support on the way down. So maybe just want to put on the radar. Inverted head and shoulders here from back in 2018, so that's quite a big pattern there if you are into that kind of thing. More usual fare comes in the form of Orosor Mining, which I know is a favourite for many. Here we broke that February resistance line and the 50-day moving average at 12.6 pence, and above that looking for the top of a broadening triangle from March as high as 27 pence as soon as the end of next month. The development today is that we're just clearing the 200-day moving average at 15 3/4, so the more price action we have above that, the better for the shares. Premier African, another very popular stock, and here it looks as though, again, a bit like Global Petroleum, we've had a bear trap and then the shares back in the range, so the range 0.17 to 0.25, so let's see if we can get back to 0.25 for the stock over the near term, maybe by the end of this month. Obviously, fans of the shares will be hoping that this is the final consolidation ahead of a decent move to the upside, which in this case would be up to 0.4 pence if everything pans out properly. Moving on to a stock which tends to fill you with some degree of trepidation every time you look at it. We've got UK oil and gas, but got the spike, another spike through the 50-day moving average. As you can see in previous times, every time we've spiked through the 50-day line, it's been a sell opportunity. We had that in beginning of June, end of June as well, and then over the recent past. Hopefully this won't be the same, but in the meantime, we've got the chance of an end-of-day close above the 50-day line at 0.11 pence, leading back towards the 200-day moving average at 0.16, which, at least in percentage terms, would be quite a nice thing to happen. Bit of bullish divergence there, also a key reversal to the upside, that type of move on Friday, so that was helpful. Does suggest that there may be more than just a day or two above the 50-day line. There may be a little bit more than that if we are lucky. Finishing off with another stock which is tends to give small cap investors a bit of a run for its money. Vast Resources here breaking through from the lows, so the lows around 1.5 pence on Vast, and initial target there up to the 50-day moving average at 2.2 pence, and then the target, near-term target, best case scenario target at the moment up to 3 pence, maybe by the end of next month if we can get a decent weekly close through the 50-day line. That's it for me today. More updates tomorrow.